This episode is intended exclusively to provide information and education to help individuals better understand cycles. However, this information is not be construed as professional advice as to the buying and selling of securities or other investment instruments. In no event does the host express any opinion with respect to or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen, the most advanced cycle analysis, hot off the press.
Tja, welcome, another episode. And sorry, in Germany, here in Europe, we had changed the time zone settings. Now we have winter time, Central European time, and I think in the US, you're still on summertime. So excuse the time zone offset we have. I think this will resolve during the next weeks. And today, we must talk about the US tech sector because there's an important cycle to talk about. And this is what I will put into the making for today. And besides that, let's try to make this the shortest cycle analysis episode of all time. Okay? So let's try to do that, and let's get it going.
But I can't forget the words my baby said. She said, what goes up, I know one day it's got to come down. Then she said, what goes around sure comes around.
Yeah, what goes up must come down. So what about the US tech sector? I mean, it's just a question of time, right? And the question of time, that's the purpose of cycle analysis, what we're doing today. Let's get into that first, right? And to talk about that, I mean, here's the chart we've just seen. And I mean, for the short episode of today, that's it. So, have a nice week, have a nice day. That's it for today. Everything else is on the chart, right? But okay, for sure, let's talk about that. What is that cycle about, what we're seeing here? This is the long-term NASDAQ composite weekly, and the cycle we are currently seeing is the 177 weeks, also the nominal 180 week cycle. And it's currently in the topping situation. So now you might ask, why is the cycle of 180 weeks important? If you are following this channel and those cycles, you know about that 180 weeks is approximately 41 months. So we are talking about a 41-month cycle. So now you might ask, why is the 41-month cycle so important? Lars, come to the point. This cycle has been detected by Dewey already in his research. The 41-month cycle is a prominent cycle in financial assets. So there's a long history that dates back the 41-month cycle. But I would like to keep this episode a little bit short, and therefore, if you want to learn more about the 41-month cycle, just head back to the video I've recorded here some months ago. You will find it in the description below that video. There was a lengthy talk about the 41-month cycle in the making, and I have made a lot of reference to the analysis from Dewey. So there's really more to come. In addition to that, and that's also interesting, I showed you that cycle, I think it was 7 months ago. I think it was in April this year. And from a timing point of view, we have been in the midpoint of that cycle. And in that video, I told you that there's still a long way to go, until we arrive at the possible topping point in time, which was projected on January next year, 7 months ago. So I made the call that we can have a very positive continuation in the US markets until end of the year. Please head back to that episode. It's all recorded. And we are now moving into the projected time window of that cycle. So this is not new. I was waiting to arrive at this point in time quite for the past 7 months. So we are here yet. We are here yet. So that's the long-term story on the 41-month cycle, which is currently topping, which gives us now the time window that the long-term cycle is rolling over. So the long-term uptrend from a time cycles perspective seems to roll over into a longer downward facing period. Yes, you have.
But I can't forget
Correct.
the words my baby said. She said, what goes up, I know one day it's got to come down.
Yeah, so that's it for the timing, but there is a cycle behind. So now, as you know, let's move to the daily chart, right? So let's have a closer look on when the exact timing might be expected. Therefore, as always, we will jump to the daily chart. This is the daily NASDAQ composite, which I'm showing here. And what we're seeing here is now the two most important, or at least 1 to 2 most important cycles on the daily chart. First, which cycles have been picked here? Let's zoom in. The first one is this 200 days cycle. Yeah, 200 trading days cycle, not calendar days cycle, which is the main driver here. And then there's for sure this shorter term peak, which can be seen here with around 80 days. So there's also an 80-day cycle. So these two seem to have a very good rhythm here in the market. If we just see the rhythm of those turns in the market here, which looks quite nice. And we are approaching now the next two, and that's important now, the next two possible topping periods from that cycle. So and that's the key now, what we're seeing here, because in the past, those, or let's maybe just focus on this longer term daily cycle. So if you see the topping of that longer term daily cycle alone, so that's the most dominant daily cycle, what becomes obvious that it's pointing now to the same timing as the long-term cycle from the weekly, if you remember that. So we will here have a synchrony of cycles coming up at the end of this year, so around a month to go. And that's what we are really looking for. Synchrony of cycles in regards to time between the daily and the weekly. And let me tell you a little bit more on that and on the rhythm of that daily cycle in the past behavior, because we're here for cycle analysis. So the short-term version I just gave you in the introduction, I think now we are here to learn something. Cycles are about timing. So let's connect a little bit the periods, or let's have a closer look on the periods when those upswing phases occurred. Yeah, let me circle that in. So that have been the timing window from that, just the up leg of those daily cycles, right? This is just the up leg phasing from a timing perspective. And in this windows, we have seen the most important upswings here, right? In the downward phase here of those cycles, we have mainly seen sideways movement. Yeah, and that's also a classic pattern which can be seen in the context of the longer upward pointing weekly cycle. You might remember that this period from 2023 now up into end of 2024 is the period of the long-term 41-month cycle. So if you see a downward facing cycle on a shorter time frame, which just results in a sideways move, or let's say pausing of the main trend, that's exactly what is expected from that cycle. So we cannot assume that this downward cycle on the shorter term period compared to the weekly might push the overall prices really down, because the weekly cycle is still pointing up. So we see these kind of upsloping stairs here. But the important point I want to make today, and that's really the window I have been waiting for now for about a year to come, The daily cycle rolls over to the downside in alignment with the weekly cycle rolling over. That's a key change in market rhythm to be expected here. And that's now the key on the short-term timing. So from a timing, there's short-term. There might be some days to go until end of the year, right? So maybe until December, maybe past the election, whatever. I mean, there's also, we have the earnings period, the election coming up in November. So there's quite a nervous period for the US anyhow during the next 2 to 3 weeks. But passing that, I don't see much more room to the upside talking about time-based cycles. And this long-term cycle really worked out quite well. So last but not least, finally, the reason I'm bringing that up now, I see 2 possible points in time. The first turning point occurs here early November. So early November is the first possible turning point when this could be reserved. The second possible turning point then arrives end of this year, early next year. So in fine-tuning the timing for the weekly 41-month cycle, we should look into early November or early January for the short-term turn to happen. Second, or last but not least, let's move now to the technical chart for a second, because this is what I'm mainly always proposing here. Once you have your cycle work done or your cycle analysis work done, so you have an idea about the timing, the dominant cycles you're monitoring, you must move over to the price action. We all can only trade price. No one is able to trade time. So if you want to transfer that into tradable action, you need to check the price chart. So in order to do that, here you see the NASDAQ composite daily, and I've highlighted some interesting points. First, and let's not disrupt ourselves here too much. First, let's cross-check the Cycles RSI. This is a standard RSI indicator. Just the length configuration has been adjusted to the dominant cycle length, which is a recommendation for every technical indicator. If you set the parameter for your technical indicator to an harmonic relation of your dominant cycle length, your technical indicator which will become much more readable. The first interesting point here is that that indicator gave the major turn already here in July, which is quite interesting, marked by the red shaded background, which means that the weekly was in time, and the signal here crossing now below the upper band, which was quite a perfect signal at that point in time. But however, as we are now rolling forward into November, December, where we expect the next cyclic turn, we see here a divergence showing up. I mean, we need to see if maybe the NASDAQ can push above that. But right now, we have not really made an important higher high in the NASDAQ. I mean, we have in the S&P, but not in the US Tech. While the index here is making a lower top on the index. And you know, this is a divergence pattern, which is also interesting, which forms up here, which just adds more indication about that the turn might be around the corner, or just with the jingle, what goes up needs to come down. And it's quite working into that time window here. Another indicator I like is about momentum. Momentum is always important to monitor, to judge a little bit the price action. So never trade against the momentum in the markets. This is a momentum indicator which is also tuned to the dominant cycle length. What I just want to highlight here, that we see that momentum is also forming a divergence against the price pattern. So price seems to move up here since the summer period, or has been moving up here since the summer period. However, the momentum has not been ramping up with that. So, and it's even in the negative zone. So we don't have positive momentum there yet, while price moved up against declining momentum. That's also not good technicals. So there are no good technicals around us in the markets right here. And as said, the timing window, we have prime time. We have prime time for the topic I just said to you.
But I can't forget the words my baby said. She said, what goes up, I know one day it's got to come down. Then she said, what goes around sure comes around.
Yeah. So I think that's why I think it is important today to review the 41-month cycle here all together. All right, as I promised, a little bit the shortest cycle analysis, but it is such an important window to monitor. That's it. I mean, I'm live today, so I'm happy to take your questions now for a second. I will move now to the chat section, and please feel free to drop in your questions. Andrea, thanks for being on time here. I see your topic. And signal of source. Let's review your question. Is it possible to make a composite of two or more markets that are correlated, like the NASDAQ and the S&P 500? Also, are there updated indicator files for NinjaTrader and Cycles Report? Okay, let's discuss your topic. Let's talk about composite for more than one market. We cannot do this right out of the tool set. You need to pre-process your data on your own. So what I would recommend to do that is use a charting software like NinjaTrader you mentioned, or TradingView, or whatever. You need to build that composite there first. So just add up those two composite models you want to build, and then export that data into our cycle scanner. But what I need to make up front is, it is important how you build your composite source first, because you need to ensure how the price data is weighted when you build your composite price data set. So pre-processing that data is important, and you need to make up your mind how to build that composite. Then upload that data into the cycle scanner, then you get a composite signal for those two markets. Another way to do that, maybe that's also, I'm not sure if that's the question. Another idea would, you could first build a cycle model for the NASDAQ, like we did today. Second, you could just open the S&P 500, build your composite cycle model for the S&P 500. When you have those two composite cycle models, one for the S&P, one for the NASDAQ, what you could do with the cycle scanner is, you can, and let me give me a second to yeah, okay, I need to be careful on that. So you could export that composite vector and then chart it with TradingView, but I think that's too complicated. So signal of source, I think you need to pre-process that data up front in your charting platform. In the early days, so your second question, in the early days, we provided indicator files for NinjaTrader and the CRSI. So it's just a reminder, we don't have updated files yet. So the short answer is there are no updated files available. But it just reminds me, why not? I mean, the indicator is available and free on TradingView. So even though the source, so it could be looked up. But I would, and please bear with me, I would leave it up to the community maybe to provide that. It's no secret or hidden source anyhow, because we are focusing right on our toolset here. So the signal of source, I hope that helps. Yeah, so I mean, maybe due to the time, it looks like we have mixed up a little bit the audience for today. So at least I don't see many more questions ramping up. So said that, please give it a thumbs up, and I would see if you hit the subscribe button so that we can grow our channel here. Really helps the foundation. And now, last but not least, I need to make an announcement. So if you're still with me, you might have seen that we will run a special 4-day workshop, which is just related to a deep dive into Bitcoin cycle analysis. So you might have seen me in our financial conference showing the dominant Bitcoin cycles now for the past 2 to 3 years, which have been spot on. And what I'm offering here is a deep dive session with 4 dedicated sessions on 4 days, so that you can learn how those important cycles have been revealed. Yeah, so there's a dedicated pattern, there's a dedicated dominant cycle, which I've shown in the Financial Summit. But this workshop will be used to really show you my settings, the research findings, how these exponential moves have been analyzed, why those cycles have been detected. And finally, this will then sum up into a complete time projection window for Bitcoin. And then Richard will follow that up with even some day trading examples. So I would really invite you to that session on November 13th, starting then in a row of these 4 days. So hopefully you will join if you're interested in Bitcoin. Other than that, I would for today say as the beginning, so
remember what goes up must come down. And baby, you've been flying too high.